you're a newcomer like we are, you first need to make yourself known. It's not so much more about processes only anymore. It's more about tech, which then enables the processes to become much more efficient. Have happy and successful customers. That is what better banking is.
Hej och välkommen till Kredit i Klartext. Mitt namn är Valdemar Gromov. Jag driver den här podden tillsammans med våra gäster för att bättre förstå hur olika regelverk och tekniken påverkar kreditbranschen och slutligen konsumenter. Jag har själv jobbat med kreditrisk på olika banker i Norden sedan 2013. Och mitt mål är att ge dig som lyssnar ett perspektiv kring hur kreditmarknaden faktiskt funkar i praktiken och hur olika personer och deras roller påverkar oss konsumenter i vardagen. Och idag har jag en internationell gäst, en vd på Alisa Bank från Finland. Han heter Sampsa Laine och vi kommer att hålla den här konversationen på engelska. Today's guest has led one of the most transformative shifts in Nordic banking, from the trading floors at Danske Bank to the retail and SME divisions at Nordea, and now is the CEO of Alisa Bank, one of the Finland's leading digital challenger bank. Please welcome Sampsa Laine.
Hello everyone. Nice to meet all of you.
Great to have you here, Sampsa. What an honor, really.
Yeah, it's exciting, and Sweden obviously is our second home market. Very small still, but something we are putting a lot more focus next year.
Wow, all right. Sampsa, you've gone from retail banking to digital banking initiatives, and now you are leading a digital bank yourself. Can you tell a bit what parts of this journey shaped how you're thinking about modern banking today?
Yeah, I think there's quite a few examples, and maybe the biggest impact came out of banking. I was in a brief while working for textile industry and also did a chairman role of Lexington company, a well-known Swedish brand, and to really understand how marketing, how digital channels and how our customer interaction can be data-drivenly enhanced sales-wise, marketing-wise, has been a big influencer on how we build a modern digital bank for our consumer customers, but also for our SME customers.
So you see that really the consumer behavior driven by the e-commerce essentially affected everything else. And
exactly, and that's what is visible also in many other industries. So customers are more and more expecting a e-commerce type of service behavior and access, regardless of the service.
That's great. That's a very good specific insight that I can just agree on. So you've been part of several company turnarounds and transformations. How do you recognize the moment when an organization needs to change a direction, especially if it's like a bigger one?
Yeah, there are internal factors and there are external factors. Typically, the external numbers are not going into the right direction, and that is often visible also in the internal numbers and internal mood, internal motivation, what kind of people are coming in and leaving. So all these things jointly are indications that things need to be changed so that you can get the best people in and not having them moving out, but then also that your customer base will go into right direction and your customer wallet sort of the amount of business you get out of the wallet also starts to improve. So there are various different signals, but they are typically all pointing to one direction. Either they are moving to right direction, or then they are slowly going to wrong direction.
And basically what you need to do as a leader is to kind of catch that dynamics.
Exactly.
Oh, all right. Any specific point when you kind of need to, as a leader, need to say, well, now we have quite a few factors that are going into the wrong direction, so to speak, or when do you kind of catch that tipping point?
It's often easier when you come there as a bit of an outsider, Then you see things in a different way, and you obviously have also other external references. You might work as a consultant or board member or in some kind of managerial role in some other organization, and you see how things are different there. You might even work for slightly different industry. You see all the kind of good stuff happening in that side, and then it's more about being brave and bringing all the needed changes to your organization rather sooner than later. Typically, we leaders, we tend to wait a bit. We want to be cautious, we want to be considerate, we want to be also inclusive. Good things, but when you take too much time with them, it may also lead that you kind of you lose your momentum. You lose the point when you would have had the time to get things happen and get the right people in, and also make all the good changes happening for your own people. So I think it's also about just getting things started, even if you don't know all the details at that point.
That's really something that I hear from several of my guests, that they encourage leaders to be more brave in taking the decisions, essentially, to trying the new things and innovate. Do you see anything on the flip side, like any kind of, do you have any experience maybe where things started to change too fast?
Yes, sometimes you make mistakes, and then if the question was that have I made mistakes, definitely I have made plenty of them, and sometimes you also need to understand that if you make a mistake, if it goes wrong, if it's too fast, if it's simply a wrong decision, even if it's a fairly recent decision, you still need to make another decision. So when you start these things, you also should kind of believe that things can also be changed if something was chosen and proves to be wrong in a fairly short while. So that is also part of being brave. So be humble and honest with your own mistakes, and when those happen, make another decision.
So what I'm really reading you that kind of rather taking more adjustments, more shorter steps than waiting around for the perfect moment to take the big leap, so to speak.
Yeah, it's the time is always right. That is kind of a very good way of putting it. And then it's just about whether you made the right decision or not. But time is always right to make new steps. Things are always changing, and the world we are living in, they are changing faster. They are changing more in an unpredictable way. So nobody really has a very strong insight on what happens in 6 months or 12 months. So therefore, it is more about being able to be flexible and adjust when things change.
When you joined Alisa Bank, what was the biggest opportunity you saw there, and what were the things that you wanted to change in first place?
I would say that there was a huge untapped market in SME banking, Nordics overall. So smaller companies did not really, and they still don't really have the service they deserve from incumbent banks. Incumbent banks, for good reasons, are more focused on their bigger customers, both on the personal side, but then also on the business side. It's fully understandable why that is, but there's a growing demand for easy to access, easy to understand, easy to use services for that customer base. And you when you are a newcomer like we are, you first need to make yourself known. And we had a big problem and also a big opportunity that nobody really knew us, who we were, what we were doing, what kind of services we had, why we were a good option for them. And to make that awareness present was the first thing we needed to do, and we are still on that task, basically, to make us more visible, make us more known. But then when you have services which are easy to access, the customer demand and the turnaround there often surprises you, and it did also surprise us. Our accounts product, for example, for SMEs was much more looked after and demanded than we anticipated, and we then kind of had different problems because of the fast growing demand. We couldn't really service well enough all the new incoming customers. And now we are then changing that how to be much more easy to access also for larger volumes. But the thing is that there's clearly an untapped market. We had some very well functioning products where the profitability also was there for us, but then they also bear better options for the customer. So to get those in front of the customer in their front ends, in their daily lives, is still the mission we are on. And there seems to be a huge demand for that kind of approach.
So just to make some reference, Alisa Bank is focusing on SME customers and now mostly in Finland, right? But you mentioned that you also have your sights on the Swedish market.
Yeah, we do. And the thing is that our recent partners, which we have published, for example, Nordea Bank, they happen to be in all 4 Nordic countries. And now we are starting in Finland, but obviously there's an option for us to be also relevant for them in other markets. Then there are accounting software providers like Procountor, owned by KKR, who also have ambitions in Sweden, and we are their number 1 banking partner. So to expand with them to other markets is quite attractive. Then we also have discussions with the bigger accounting software providers in Sweden who are really kind of well established in that market. And our ambition is to be their partner so we can serve their existing customers with their banking needs. And that is quite interesting, and it's also very interesting for the fact that we have had a very strong momentum in Finland with that approach. So customers are already using in their accounting activities a well-known software for them. If we can include banking services on side of their other daily routines, it makes the banking a lot more easier, a lot more easy to access, and also what we see, they are using the products more.
Yeah, for sure. If the credit lines becomes just like a click of a button away when you're doing your monthly billing or anything like that, or just checking your company accounts, of course, that's much smoother user experience for those SME clients. I'm just talking about from own experience. Because you basically don't bother going and just even trying to search for different like credit offers in that sense, unless you can get that offer like just in front of you, really.
Yes.
And what you mentioned as well for the accounting software, of course, many of them have tried to or have made the different integrations to make it all smoother. But of course, when you get everything out of the box, is a completely different experience, so to say. So what are your kind of ideal SME clients? Are those, do you focus on like existing businesses or newly established ones, or what are the subsegments?
Oh, one keyword is growth. The ones who are there to grow, I think they make the ideal customer, and they typically have not the strongest of balance sheets, but they have very strong invoicing, and their incoming business looks very good. Often they also sell to bigger customers, like bigger corporates, their services. Sometimes also for retail kind of individuals, but often their customers are bigger kind of a B2B buyers, and that is the ideal customer. So we know that the buyer they are kind of invoicing to, and they have as their customer, they are often more credit worthy than the salaries. So in our scoring model, we are not only scoring the balance sheet, we are also scoring the incoming business. And the good thing with this collaboration with the accounting service providers is that we have access to a lot better data than those more kind of established banks do, who don't have the invoicing data and who don't have the incoming business data in their scoring models. So that's why we naturally, with that data, we focus more on the ones who have more incoming business and maybe a bit less strength in their balance sheet, and the strength is then through time a result of this incoming business. So that is our approach, that the ones who have gotten their sales going, who have a good service, good product, and the business going into the right direction, but still according to typical traditional banking scoring matrix, the credit strength is not so great yet because the balance sheet is not so impressive. Those are the ideal customers, and in this stage where the economy seems to be slowly taking off and slightly better months coming after a worse month, in this typical situation, our model seems to be very, very attractive. So our business momentum is now clearly faster and clearly better than it was in the first part of the year when things were not going into the right direction in the economy, and invoicing volumes were rather going down than up. Now when they're going up, our model is making us more, I would say, suited for these customers who see the recovering demand.
I see. Really interesting, Sampsa, because that essentially enables those SMEs to get financing, to get access to the financing like a year or even more ahead before they make the, like compared to traditional services, before they make like the financial statements and report those numbers of increased sales and all that. So they get recognized, and of course, ideally, you even want to get it as early as the contract signs. So maybe some tips and tricks for the SMEs to kind of bill the large amount up front, so you can you can get that on the in the system, so to speak, right?
Yeah, it makes the presence of the, I would say, professional top-notch accounting software, which there are quite a few in Nordics. It makes that presence very, very kind of instrumental in that equation. So there's a clear benefit for these end users, the SMEs, to have themselves in one of these platforms and using those services. It gives them more value add. So what we have seen is that our collaboration with, for example, with Procountor, it is actually also bringing them new customers, not only making us able to serve the existing customers in their financing needs or in their account opening needs a lot better than our more kind of a traditional challenger or competitors are sort of doing. So there's a clear win-win. So the customer wins, but then also the accounting service provider wins, and then we also win by getting new volume in.
Yeah, that's for sure. So you often mention this better banking, like banking as a service and beyond. What does it mean to you in practice?
It means for us to be there where the customers are in their normal daily routines. And it also means that they will learn a bit more on how valuable it's for them to have their data and their behavioral data, their accounting data in a sort of in an order. They're doing their annual accounts. They're using professional services so that they can be served better based on the data. So that's what we mean with them, and we feel that the banking it is a service which needs to be embedded into this daily routine so that we can pick up the data, we can, based on the data, understand the customer and offer them exactly what they need so that they don't need to apply. Rather, the service can offer them what they exactly need based on that data.
I see. So the advisory became like kind of automated in that sense, advisory part of the SME banking business essentially, and that's great. That's essentially means that you get banking advice not just once a year, but every day essentially, and I can really kind of relate to the times when big banks or traditional banks would say that even retail segment for them was a kind of relational relationship to the clients was very very important when the big traditional bank would say that, like, well, we care about our customers, that's why we need to kind of meet with them, discuss their finances and all that. And what we see now is essentially, you don't get that. Like, everything has shifted to the instant kind of service online, to the digital service online. So do you see that is also coming for the SME part of the business, for like this trend is kind of continuing for the large and more complex questions, essentially?
It is, and the more we have, I would say, structured data to build the service models on that data, the more we are equipped to do all these things, also in more complex environments. And I think there's a one good example with the Revolut, how they first kind of started with a fairly simple set of offerings, but now they are improving more kind of a month by month on adding new features and adding new services once they have more data on their customer base, and then they can actually expand the offering, and they are showing for all of us, the other kind of banks, what can be done already, what we have, and I think we also need to be humble in understanding that we can do it. It's the question more whether we will do it, whether we want to do it, and whether we want to build our own improved service model for the end users, because the competition and the offering these end users get is getting more kind of a tough and tough. So the services will become also in banking easier to access and better for the end user side. And then the question is just that who is there, who's going to kind of change the established way of offering them, and somebody will. In personal side, we have already seen that with retail. We have seen also it with Klarna in Nordics, very good example. But it won't stop there. It will be just these kind of innovators who will make it even better. And then the question is that, do you want to be in that race, or you want to be just sit still and be something like many of the traditional banks are at the moment?
Yeah. You mentioned that this accounting data, this is something that is really like core within your credit model and within your offering, essentially, to get the right things at the right moment for the right client. Do you require that type of information to be shared, or do you have anyone who is a bit kind of reluctant to share that kind of information?
Technically, we always need to remember that it's customers' own data. So we need to ask the consent, and we do ask the consent, but we don't have too many customers who don't give the consent. They also seem to understand that it's for their own benefit. And at annual accounts level, it's also public data, but before the annual accounts are drawn and before they are published, it is more kind of a private data. And therefore, we need to ask the consent. But it also is a bit of a trust element between us and the end user. So if they don't trust us, they don't give the consent, they shouldn't. But if they do, then they typically give the consent. And as I said, we don't have too many individual customers who don't give it. So rather they do, because they see the value. And then it's our job to deliver the value. If we don't, maybe they don't give the consent forever for us. So there's a bit of a kind of a you trust me, I trust you, and I serve you mentality here. And I think it's working, at least for our benefit at the moment.
Oh, so you need to really think like several steps ahead, so you don't kind of misuse this initial trust or curiosity, I would say. Like, okay, what can we get here? And then like, oh, coming soon page is coming up after you have shared everything.
Yeah, no, you can't do that. And the good thing in Nordics is that customers typically trust their banks, and they should for many good reasons. But it is also something we want to keep. We don't want to destroy this trust. And we are also a regulated bank with full EU banking license, meaning that we have done quite a few things to gain that status, and we definitely want to keep it. It is something many of our bigger partners basically require from us, and at least they do appreciate the fact that we are regulated and governed by FSAs.
Yeah. I mean that makes complete sense, and what do you think that most of the banks still underestimate when serving SMEs?
They understand what these customers actually can get elsewhere, and that what they can get elsewhere is improving quite fast. So that is typically what these kind of a more established players somehow underestimate, because they still have these old customers and they are still making nice money out of these old customers. Even if they don't so much get the new ones, they don't see it in 1 year or in 1 quarter. It just happens quite slowly. I know that I was working at Nordea a few years ago, and we did quite well, very well actually, with the existing customer base. We were just not so strong with the new established customers. We did some changes to get better position, and some of them worked quite well. But still, for a long time, there was kind of a very happy bank, very satisfied owners with the present customer base. And many of the new ones, they are small in the beginning, so you don't get that much business out of them the first year. But in the 10th year, you get a lot of business. And if you miss the first 2 years, you may not get the 7th or 8th year either. And I think that is the issue, and that is something which guys like us, Revoluts and Monzos and these people, and also Klarnas, they are understanding that they need to serve also the new ones so that they have a strong customer base in the future.
That's very interesting insights that you are saying. Essentially, it's much more difficult to win those clients when they are great, then they have become the unicorn, so to speak, to get their banking business when everybody else wants that. But it's kind of tough when they are still like a startup, or less of a company. Essentially, that's what you're mentioning essentially here. But that's what relationship comes to, right? I mean, you need to kind of be there for the long game, for when both in the times when it's not very maybe lucrative, and in the good times as well.
Yep, that is true.
When it comes to, you mentioned the learnings from Nordea there, and you have been in the leading position there for the Finnish market. In the times of big change, essentially. What lessons from that time do you still think are relevant for the banks today?
I think there are at least 2 things. First one was the about being brave and making the changes when they seem to be needed. I think that's what we did with the management team back then, and we did some tough decisions when it comes to FTEs, but then also some good decisions when it comes to investing into new areas and new business models. So that is one thing. But then the other thing is that you need to get the right people in. People are still, even in the software business, people are the ones who build the software. It is becoming more and more AI driven, I know, but still it is still the right people in software side, it's in banking side. And I would say I was very lucky at Nordea that I got these right kind of mentalities in to serve the smaller SMEs also, and the growing SMEs, people who wanted to serve them. They were not perhaps always considered so great in established banking, but they were great in understanding what these businesses need, how they should be approached, what kind of product versions we should have. And that was perhaps the best thing at Nordea, that I got so good people into my team, and we did a lot of good things in a slightly different way, and that also brought in good, I would say, good service for the customers, but then also the profitability for the bank was there. So it was kind of a plus plus.
Wow. That's a timeless advice, actually. Well, and works in all the times, I would say. Talking specifically about the retail world and SMEs, credit, customer onboarding, and KYC have become like a real bottlenecks for many players. In Denmark, for instance, some SME banks have added explicit fees for their annual KYC review that is not very appreciated by all the customers, of course. Yeah. How do you see a modern bank is solving that?
It needs to come through technology and access to data, and therefore having access to clean data, structured data, and understanding how important that is, and having also the tech and the capability to utilize it is so crucial. It's crucial in credit process, but it's as crucial in KYC, AML, fraud monitoring attempts, which are increasingly needed also by the banks. So it's not only that you need to build something once, you need to have right people, right team, and partners to sort of continuously develop that capability. And as long as the regulation is as demanding on the onboarding side as it is, the better service comes through better technology. You can obviously make humans do more and more manually. You can do that, but it's not the way forward long term. You need to invest into your technology. You need to have the right tech people building your compliance function and your sort of also credit function. It's not so much more about processes only anymore. It's more about tech, which then enables the processes to become much more efficient and also pleasant for the end user.
Yeah, so essentially technology is opening up their new ways of working, not only for the customers, but also for the banks, essentially, to serve those customers as well. So everything circles back to what is possible and what is efficient, what not only within the banking, but as you mentioned before, like e-commerce, right? We don't have the same e-commerce infrastructure that was 10, 20 years ago, although you could order something online 20 years ago. Like the experience is completely different right now, for sure.
Yeah, that is so much the case in many service industries, and banking should not be seen as different. Obviously, we have more kind of a tighter controls, and everything need to be flawless, and there's no really room for error, but still the customer end user experience needs to be the same, because the best performers, they can do it, they can make it happen. So then actually that is where the bar is. So if you want to be competitive, you need to be as good as they are, and therefore I'm happy that we have these more kind of a tech companies like Revolut coming into banking and showing how it should be done. They may not always agree on all the details with all the regulators, but they are simply changing the industry to such that the end user has more power, they have more to choose, and how they want to have it will define how it will be.
So Sampsa, you mentioned you had the created partnerships between Alisa and major banks like Nordea, for instance. What role has Alisa Bank in this setup?
We are basically a product provider in that space. So they have the huge customer base and customers where they mostly have the services they need from this incumbent's side. But then, for example, in Nordea's case, they didn't have a factoring product, invoice financing product supporting the smaller end users, these kind of SME side of customers, and then they decided to sort of have an external partner in that area. They made a bigger RFP on who is who, and then we were the lucky one chosen. out of a bunch of different Nordic providers. So we see that our technical competence will be a defining factor in these kind of relations going forward. So therefore we are investing quite a bit on that. But then we are also investing into people who understand these bigger operators, whether they are banks, whether they are accounting service giants, and we need to fit into their models and their kind of a way of serving their customer, understand what drives these customers, where we can get the data, how we can utilize the data, how we can make their service better for our shared customers going forward. So that I think is the key, and I hope at least that in Nordea's case, those two factors, both tech but then also people, were the reasons why we were chosen.
Interesting. So becoming basically Alisa becomes an expert within certain products that you are offering to bigger banks that do not necessarily have those products in-house then. Since you've been there beforehand, what was the reason that essentially the big banks didn't choose to develop something within that space by themselves?
Yeah, I would say all big providers have services and service components and technology not developed and run in-house. So you have all your web components. Everybody's using Microsoft Excel, for example. They're not developing those things by themselves. So they're using these more industry norm solutions. And we plan to be one of the industry norm solutions, at least in Nordics, in invoice financing. And therefore, we see our product applicable to everyone who has significant amount of SME users in their front ends. We need to be able to adjust so that we can offer our service in those front ends where customers need to identify themselves, and when there's a high enough quality in terms of risk management and so forth. And therefore we have chosen other banks and accounting service software to be our main target groups, because the data quality, the kind of a user safety are there in both of those kind of two big sectors.
I see. And what makes a partnership truly work between a large bank and a digital challenger like Alisa Bank?
It's kind of a law of physics. So the bigger component quite often draws the smaller component to each other just by law of gravity. And we somehow also need to understand that we cannot change them, and we shouldn't even try that much. We should adapt and adjust and make their service better by being the flexible, capable partner for them, and make their end customers feel slightly better, make their business slightly better also at the big bank side, but then also with that make our business slightly better. So it is that. So we need to stay humble, and we need to add value into these equations, and that's what then kind of gets us in, but also keeps us in, and we are investing into that quite a bit, so that we can be the best partner they can have in these specific services.
I see. How do you see this partnership-driven banking between different players evolve in the coming, say, 5 years in the Nordics?
I believe there will be more of those. So bigger banks will be more selective in choosing what tech and what services they run and develop by themselves. And I do believe that there is more also banking services they are sourcing from somebody else. And that's how I believe the world of more API-enabled banking will kind of lead us. And that's how it most likely will go. So banks develop less components by themselves. They focus more on the customer, more on running the orchestration in front of the customer. And then the technological components, the products, they come increasingly from third parties.
And then the components, what do you have any examples there?
I would say that let's say that we will start having more and more also, for example, AI agents in serving the end users in bank sites, and some banks may develop those components by themselves, knowing where the good is at the moment in that space. I would say I would at least recommend, and at least what we will do, we will source that capability from the ones who are the best in that space. And there is more and more quite fast developing areas in data-led service and data-led servicing, and it's unlikely that that banking organizations will be the ones having the best out of the whole world in that space, because the data will become more and more used across the same data across different industries, and therefore the ones who are better at building those specific service components on that data will be quite universal sort of across the industries, and it will be unlikely that a bank will be the best performer in. There can be a bank who might, but overall that all banks would be so good in developing these components themselves that they wouldn't utilize the ones who are already quite far.
Oh, and from your perspective, what's the next like real step in the digital, say, credit management for better decision making, not just automation and quicker and all that, but really better insights?
I would say that we are quite happy with what we have now on the onboarding kind of a scoring side. But then when it comes to monitoring, ongoing monitoring of the end user and their sort of performance and all the indicators, including also sort of more compliance related components, I think that is an area where we're going to focus more so that we can both manage our own compliance risk management better, but then that we also can be more I would say real time for the customer when their situation is moving to wrong or right direction, so that we can adjust our service more or less real time for the customer, and also be quite transparent in why we are doing it and what we are doing.
I see. That's very interesting, because for many banks they kind of are becoming very cautious to onboard new clients because it can be a hassle to get rid of them in the end.
It can be, and also in some cases it just becomes quite difficult, or is quite difficult to get a reliable data out of them, and especially for retail customers where the data security is more higher. In SME side, in Nordics, a lot of the data is public. So you can even get a lot of the basics from public sources, and therefore it's just to set it up in a correct way, and you're already in a fairly okay situation. But still it is that not only is a wrong credit decision an issue for your P&L, a wrong set of customers into your bank, it is also an issue from your regulator's point of view. So I think there are also understandable reasons why banks are so cautious, and something the society needs to think about, whether we want to keep it that way or whether we want to be a bit more, I would say, allowing, but then there's obviously also a consequence. So then it is also then easier for wrong kind of behavior to get into your customer base. So I think it is a question where you don't have one right answer, but something which should perhaps be debated a bit more.
I see. So accessibility of those banking services, and what does that mean for the security of the entire system, essentially?
It is that, and we see, and everybody see also more kind of a fraudulent attempts and more kind of a customers coming in who are actually not those customers who they claim to be, and who are also misusing the data, and they also seem to have access to data considered as private, and therefore they come in as somebody else, or in different format than they actually are. So So that is also an issue and something we banks also need to be quite serious with.
Yeah, and as we mentioned before, like technology enables not only the services part, not only the banking part, but it also enables for the fraudsters to get onto that. So, of course, the response from the industry should not be like less technology, but it's like never-ending race. I mean, you need to build it up better and better. I mean, we don't have the fortresses any longer in our world because they no longer work. We know that, so that's no point of building that. I mean, there is no point kind of keeping yourself into that dystopia of kind of upgrading an old fortress. I'm sorry, to just try to pretend that it will protect you if something else if something bad happens to your country or something like that.
That's exactly the case, and I think the technology is as you mentioned very well. It's kind of both for us in many cases, but it's also in some cases against us. So that is something we also need to be mindful and understand that whenever we also give the access to data for somebody, we should also consider who that somebody is, and therefore, as I said, I'm happy that our bank gets access to our SME customers' data typically. But we just also want the SMEs to understand that they should also think that what is this Alisa or somebody else who is asking that permission and have the consideration before clicking the yes or no button.
All right. When Sampsa, you have this kind of very interesting background. You've been leading both the traditional banks in Finland, and now you're leading like the young bank. What's the main difference in that sense when it comes to leadership and culture between young bank and traditional one?
I think it's a speed. We can make both the good things very fast, but then we also can make the mistakes very fast. So that is essentially the difference. So we can have the idea in the morning, and then the product released the next morning. Basically, that can be done. So it is that fast. But then when you do it so fast, you're not always getting everything also right. Sometimes you do things you thought they were kind of exactly what they should be, but they weren't exactly what they should be. And there's a bit of a flip side on it as well. But still, I would rather choose the fast than the slow. But I think that the speed is essentially the difference. Then the other difference related to that is that everybody has a lot more responsibility in a small franchise. Everybody is a doer. There's nobody who only does admin or management or something like that. Everybody is on it, basically. So it also makes the atmosphere quite a bit more energizing. I would say that everybody is responsible, everybody is needed, and everybody is kind of there to make things happen, not just say things and so yeah.
And what have you learned about keeping people aligned when the company is changing fast, as you mentioned, fast decisions?
I would say that is a challenge for everybody. I think what I have learned perhaps the most is that it is very difficult, and to keep the people informed is not so that you can tell it once, you can tell it twice, then everybody understands. It's the amount of repetition you need when sharing information. And also what we are struggling with, since we are a listed company, is that we would like to be more open in terms of how we are performing and how all the P&L components are doing. But as a listed company, we cannot do that. So if we would be a privately owned bank, then it would be quite a bit more easier to be open also towards our own people. And I think that is, for me at least, the biggest challenge, that I like to be open, but then with the status we have with the listing, and also to some extent being a regulated bank, we need to be cautious on how we share the critical data also in-house.
What I was really thinking, Sampsa, was essentially, from my experience, the bigger organizations, like the bigger banks, they have normally, it's not like they are slow or anything like that, but or they are slow, but it's essentially they have more dependencies to the between their products, between their different divisions, also to all the different versions of the products that have been made during that time. Are there is there any difference as you what you are telling is essentially that there is a mindset difference between those between those people that you're working with? Is it more than just sort of dependencies that are holding the bigger corporations back?
I would say you have a very good point there, and definitely it is. And an interesting thing is that we also have recently onboarded few individuals from I would say and traditional incumbent, and it's not that they are not performing in our context pretty much immediately, and they did perform also in the previous one. So it is not so much that the individuals are fundamentally so different. I would say it is more that the environment, the dependencies, as you mentioned very well, but then also the ambition may be slightly different. But people, right people, they can deliver in both contexts. That's what I've also seen, that you don't need to be truly specific in order to be sort of strong performer in incumbent bank, and then a very different person to be a strong performer in challenger bank. I would say there are a lot of individuals who can perform in both. It is just about making these changes in your own mindset, which are needed. But it's also so that if you would move from our side to, let's say, SEB or Handelsbanken or whoever is kind of there, it also means that you need to take a bit different attitude in that space. But still, what I have seen is that the strong performers, they will perform also in these different contexts.
Yeah. So creating the atmosphere is your main task. Is that right, as a leader?
It is at least one of them, and also to have the right team out of these great individuals, so that not only are they great by themselves, but that they make a great team together, and they want to perform together. I would say that is still the key, and it's something you pretty much think it day in day out, that what is the how do I make the best package out of these great people, and what is exactly the right kind of role for great individual X. And it is a continuous sort of, say, challenge or opportunity, however you want to put it. But it's so crucial to have the right team. I have seen it in so many different places, and it's not always that it's about individual capabilities. It's more about the joint capabilities of the joint team, and how to make that dynamics work. That is typically what makes the difference.
Yeah. Now we are getting into the soft skills a lot, but that's great. That's the key differentiator to those organizations. And if that's like Alisa Bank or other fintechs, that they attract those kind of people and can create those kind of teams, then of course that becomes their real advantage. That's why customers kind of flock to them in the end, if they can get the value that they are expecting, so to speak. So looking 3 to 5 years ahead, how do you want Alisa Bank to be known in the Nordic market?
I hope we are at least one of them who sort of change the thing to an extent that it makes a difference. Make the service more available, make the services also more reliable. Not saying that they are at the moment, but they can still be even more. and make the integration between banking and other relevant B2B services more seamless. So I would say that is what we want to accomplish, and Nordic is the right word you mentioned, but then also that we would be the one who develops the strong talent for this industry, and therefore we pay a lot of attention into the ones who come in as non-experienced people, the fresh people, so to speak, that we'll get the right talent in, not only from the experienced part, but even more from the inexperienced part, and we are the ones who can develop great bankers of 2030, from our own team also, and that obviously needs more data skills, more technical skills than before, but still that we would also attract the right talent out of universities and make them great leaders and great performers going forward. If I were to choose, that would be the kind of the thing I would like to be remembered.
That's great that you see like a greater perspective for not only the banking industry, but the society, I guess, in the Nordics, right? So, I mean, banking is, as you mentioned, it's a service industry, so it should be serving some purposes, some that other businesses or other clients or having essentially as their goals. So it's not the goal in itself to have a good banking and then be happy with this. I mean,
our job is to enable things to happen. People have better homes and bigger homes maybe, or more just better homes, better businesses, more safe transactions, and all these things to happen. It's the purpose of banking. Right. To enable things to happen in a better way, and it's, as you said, banking as such it's not important itself. What it can enable is important.
Yeah. And finally, if you could describe better banking in one sentence, what would that be?
Happy and successful customers. That is what better banking is.
Well, Sampsa, thank you very much for joining us today and sharing such an insightful perspective. I really feel that your experience has driven a lot of the success of Alisa Bank as well. It's been great hearing how you approach partnerships, SME growth, and also better banking, what it really means in practice. And wishing you and your team all success on the journey ahead. Och tack för er som har lyssnat på den här episoden. Detta var Sampsa Laine på Alisa Bank, och prenumerera gärna på kanalen så du inte missar nästa avsnitt som kommer ut nästa vecka. Ha det gott, vi ses!